The stock of the day to start, though, and that is Qoria. QOR is the ticker code. So it's a digital safety company. And as you know, we've had results coming through for Qoria today, largely in line with consensus expectations. It's reiterated its FY26 guidance. It's also got that merger with Aura on the cards. So it continues to progress, but there's a few updates on that. So the management team and board will now be led by the existing Aura CEO and the chair, and the deal's associated equity raise has been upsized. So pricing, I don't know, is it a better reflection of the trading price now? I guess it's reflective of changes to technology stock valuations. So it's, I guess, been done to address some of the market pushback against this deal. So interesting one today. Luke, I'll start with you on Qoria.
Yeah, look, I don't tweet much, Nadine, but I did have one this morning and basically said Qoria keeps using the term merger for this agreement, but this is looking less and less like a merger and more like a backdoor listing for Aura. There's now a lot of equity being put into this business from the Aura backers, not just the placement which you were talking about, which has been upsized, and also that price has come down, which I think is the most disappointing thing for Qoria shareholders today. But also a equity facility for Qoria to use on their way through to getting this merger taken place. So and then obviously the management stuff you said as well, they're taking more of an operational hold. So as a Qoria shareholder, I think they're very much backed into a corner here. I think right now you're really relying on Aura to come through, but they control this situation as best I can see sitting here today, with regards to providing liquidity to Qoria and then also the valuation of that placement as well. It's been a very, very tough few months, and even just to think back where this business was in sort of September, October last year, with very strong growth, a share price up around 80, 90 cents. And I remember at the time, some shareholders sort of calling for an equity raise at those levels because it's always carried some debt on the balance sheet, this business. And it's one of those things in small micro caps where as long as operationally things are going well and your share price is high, everyone overlooks debt on the balance sheet. But, when things turn, share prices are down, there's questions around sort of cash flow and cash burn, which there are here. All of a sudden that debt becomes, a big red mark on everybody's report. So I'd be exiting this one, Nadine. I think there's a very, very complicated capital structure going on now here. I think it's hard to know how this exactly plays out. And in the meantime, I jotted this down. Cash burn for Qoria, put Aura aside. Cash burn for Qoria was about 10 mil for the quarter. They've got about 8 mil in the bank, but noting that the fourth quarter that we're in right now is also their lowest for cash collection. So they'll be tapping that Aura facility for cash pretty soon, if not right now. So I think there's just too much going on here for me. It's too hard to put a valuation on it. The index inclusion stuff, which was touted originally, that's now gone and dusted as well. So this is a pretty clear sell, and maybe revisit later on down the track when you have some more clarity.
Interesting, because this was touted as a great Australian tech company, great things were going to come. Luke's very negative. Are you?
Oh, Luke really does sum up the issues well, and when you're in the crosshairs as a shareholder, you tend to know them. I looked at it like one of our members asked us to look at it, and I looked at it late last year, and I looked at that debt and thought this could come unstuck, because I guess back then, and Luke was saying that September, October, and I looked at it in November, we didn't really have a clue, did we, about the impact that negative sentiment on software owing to being replaced by AI would have. And today we're going to look at a number of stocks that are in that situation where they've been hit hard by that downswing in software. And when you've got debt on your balance sheet, as Luke said, your options are so much more limited as to just it's better to cut and run. And that's a situation, unfortunately, with this stock. Like, they had great ARR growth, but their margins were a bit thin. This is basically how I looked at it. Margins were a bit thin. The compelling factor for avoiding or for not being in it was debt. So we've seen that KMD. If you have debt and your business model is under question, it's an existential risk. That's the bottom line. And these guys are just in survival mode, and Luke's saying, I don't even know what form that survival is going to take.
Well, that is a sell if I've ever heard one before. Guys, thank you. Sell Qoria, too complicated.